Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on the financial performance of Nigerian banks as at September 2021. As we approach year-end, we thought it's important for shareholders to have an insight into the 9 months earnings of the banks before they publish their full year results. Customarily, most of the top banks pay dividends, a share of profits that a company pays out to its shareholders based on their full year performance. 8 out of the 12 quoted banks on the Nigerian exchange have published their 9-month financial performance as of September 2021. The banking sector controls over 50% of total market activity based on the volume of transactions carried out on the exchange. Publicly quoted companies are mandated to publish details of their earnings or financial performance quarterly because these companies are available for anyone to invest in. Access to published financial results enables investors to make investment decisions. Before going into the analysis, please note that 9 months 2021 means the first 9 months of 2021, January to September. Year-on-year means comparing the period this year to the corresponding period last year. For instance, comparing January to September 2021 to January to September 2020. A broad review of the 9-month 2021 results of the banks shows that most of the banks grew their gross earnings. This is the summation of all the income earned by the banks, albeit at mostly single-digit rates, that is less than 10%. This can be attributed to lower returns on investment securities, as special bills, a form of treasury bills which is currently 0.5%, forms a major portion of the bank's investment securities portfolio. Investment securities are mostly government instruments like treasury bills and bonds. The CBN decided to convert the excess cash reserves of the banks with the CBN to special bills last year to boost banks' liquidity. The cash reserve ratio, currently 27.5%, is the percentage of customers' deposit that commercial banks must keep with the CBN. But when it exceeds this rate, the difference is called excess reserves. Despite the challenge of low income growth, most banks reported impressive profit after tax with double-digit growth due to lower loan provisions and operating expenses. Now to the results. Access Bank recorded a growth of 17% year-on-year in gross earnings from 593 billion naira in 9 months 2020 to 693 billion naira in 9 months 2021. This was boosted by strong interest income, mostly income from loans and investment securities, and net foreign exchange gains. Similarly, PAT was up 19% year-on-year to 121 billion naira in 9 months 2021 from 102 billion naira in 9 months 2020. GT Bank posted a marginal decline of 3% year-on-year in gross earnings to 319 billion naira in 9 months 2021 from 330 billion naira in 9 months 2020 due to lower interest income from investment securities. In the same vein, PAT declined by 9% year-on-year to 129 billion naira in 9 months 2021 from 142 billion naira in 9 months 2020. Zenith Bank's gross earnings grew marginally by 2% year-on-year to 489 billion naira in 9 months 2021 from 454 billion naira in 9 months 2020, while PAT also rose marginally by 1% to 161 billion naira in 9 months 2021 from 159 billion naira in 9 months 2020. UBA's gross earnings increased by 8% year-on-year to 489 billion naira in 9 months 2021, while PAT rose significantly by 36% year-on-year to 105 billion naira in 9 months 2021. This can be linked to impressive growth in fees and commission, as well as a significant reduction in impairment charges, provisions for bad loans. Stanbic posted a significant drop of 20% in gross earnings to 146 billion naira in 9 months 2021 due to a significant drop in trading revenue and fees and commission within the period under review. Similarly, PAT was down by a whopping 40% to 40 billion naira in 9 months 2021. Considering gross earnings, Sterling, Wema, and Unity Bank posted year-on-year growth of 7%, 9%, and 6% in 9 months 2021 to 109 billion naira, 63 billion naira, and 36 billion naira respectively. Also, they boosted PAT by 30%, 138%, and 23% to 9.5 billion, 6.2 billion, and 1.9 billion naira in 9 months 2021. We expect the overall 2021 earnings pattern to follow the 9 months 2021 trend. Hence, investors are advised to pitch their tents with banks that have posted positive performance, especially in the banks that have maintained good dividend payments in the last 5 years. Remember that investment in stocks may not guarantee capital preservation, but it can offer a higher return than fixed income. You can allocate a portion of your portfolio to stocks based on your risk appetite and your age. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 070-8246-3747. Stay blessed.